Welcome to Trade of the Week with me, Ntaoleng Lechela. Now this week, Coronation Fund Managers, JSE and Remgro are up for analysis. Moxima Gama, Senior Technical Analyst at the Money Hub, joins us with her survey of these counters. Moxima, thanks so much for your time today. Happy New Year.
Happy New Year.
Great to have you back in studio with us.
Thank you.
Let's start with Coronation, right? I mean, it's not too long ago it was embroiled in that spat with SARS that really took a knock on the company's earnings. Years later, the impact not as bad, but we are still seeing it filter through. Fundamentals improving, seems like we are on a road to recovery. Equity markets also doing well. What are the charts saying?
So obviously I'll be looking at a technical side of things, but if we look at it ubiquitously in terms of just the general aspect of consumer or rather investor confidence, it seems as if the reason why I picked this is because there is some kind of lift in that, because we are really at the cusp of the expansion phase of our economy. I mean, our rand is hitting 16. Interest rates, the speculations there'll be further rate cuts, about 50 basis points, and our inflation is pretty good where it is in terms of its percentage. This all becomes very attractive for foreign or local investors. And the space that I'm talking about, it is in investment banking. I see a lot of the financial stocks starting to pick up momentum. Now, technically, why I chose these is because, as you said, they've had a really bad run, and you know how I love shares that have gone out of long-term bear trends, giving us that upside potential, and these three shares seem to be giving us that. So just because of a lift of investor confidence, obviously our consumerism will also be on a high because now we've got more money in our pockets and people are probably going to invest more. It's just, it's a whole cycle in the expansion phase that will support fundamentally the shares I'm talking about. Technically, we'll just go through them right now, so we could look at that. We'll start off with Coronation. I mean, it was a while back, I think it was in 2015, I'm not too sure, where I actually called Coronation a sell. The charts were showing that upside was starting to get exhausted, and it has really been pulling back since then, and quite significantly so. But it has done something that's quite important in my aspect in terms of technical analysis, and it's broken out of a very key trend line. It broke out in June 2024. It seemingly all of these shares kind of broke out in 2024. Okay. But they didn't really hit the roof immediately, which is kind of fair in terms of you would like a share to try and figure itself out before it starts going on its merry way upwards. Because once it did break out, it started to consolidate between the two levels, which was 41.10 and 35.65. It breached this 41.10 recently in 2025. And as you can see, it's now maintaining that 41.10. It's now maintaining this uptrend that it's in. Now, having to breach that key resistance is quite important because it then shows that investor appetite is starting to shift from what was, it shifted from what was pessimistic, unsure, to, okay, let's see what this is giving us. So there's optimism that's coming through. And any continued upside above 50.50 actually makes a good buying opportunity. But the thing that would make me stop on my tracks at this point, instead of going out and buying it immediately, would be the fact that the weekly RSI is overbought. Now that says just wait for a near-term correction. Okay. Because it's obviously currently at a premium. It could correct at a cheaper price. My suspicion is it will correct probably to 47.80 or 45, as long as it maintains this uptrend right there. If it does, then it means that investor confidence is still on a high. So I would say the most it could fall is 45 Rand. But if it kind of pulls back to about 47.80 or 45 and then reverses back up, that also gives us a good buying opportunity, where you can also reload at 50 Rand 50, and that could then see those gains to 57, 66.05, gradual move. Because what happens when a share is broken out of a long-term bear trend and it starts consolidating at the bottom end, it has a tendency when it recovers to complete a 100% retracement to its all-time high. We've seen that. This is a long-term hold. This is a long-term view. We've seen it happen with platinum shares. We've seen it happen with gold shares. There's just that innateness that it goes to. It's gradually. We don't know when, but it does do a gradual move. Platinum shares actually went up to their all-time highs faster than I thought. But yeah, this could be a gradual move towards there. Now, the all-time high for Coronation is at 115.20, which means if you do invest at around 47.80 or 45,
You could possibly triple it.
Yeah, you could. And that percentage is at 141. So I would say every time it breaches key resistance levels, which is the ones I've marked out here, it would be a time to reload, just to add more of the shares as it goes up. That's how you could cleverly invest instead of just buying once and holding, is to every time it breaches resistance. So what the charts are saying is right now, don't get in because it is overbought. Wait for a pullback at most 45. If it reverses above 47.80, just get in and just reload on the top. Now, the alternative scenario is if, let's say, anything happens, bad news or whatever, and that trend line is breached, particularly if the 45 Rand level is breached, then it means don't invest.
Okay.
Because it could pull back to about 41, which also makes a good buying opportunity unless it is breached. Unless 41.10 is breached, then it means we have to put this whole thing on ice, forget about it, look at another share. Because if the 41.10 is breached, then we could see it go to 35.65. It could just capitulate, generally. So my recommendation at this point, or what the charts are telling, is that if it kind of holds above 47.80, we could see it go to 86.50, which is a nice 81% gain. But if it does pull back anything below 45, rather just wait. Don't invest yet.
All right, let's move over to your next pick, which is the JSE, right?
Yeah.
You spoke about, we're seeing similar trends playing out in all three stocks. I mentioned there at the top with Coronation that we're seeing a boom in equity markets. That, of course, playing out with the JSE as well. So take us through that analysis.
So with the JSE, seemingly around 2024 was the year that a lot of these investment banking shares were breaking out of bear trends. And as you can see with JSE, it was in September 2024. It broke out of that, the resistance trend line of its bear trend. But what is quite significant about what's happening is it's maintained that nice uptrend, but it's also, I don't know if you can see this blue trend line, it's a bit faint, but it is a key resistance trend line. And I've mentioned this before, that every time a key resistance trend line is breached, the trend becomes steeper. So this then means that we should look forward to a bit of a steeper uptrend than the one that we're currently experiencing. The buying opportunity level there was at 138.90.
Okay.
But what's stopping us from going long at this point in time, because last night it was trading at 152.10. So it means we should at least, wait for that pullback to that original buying level, which would be at 138.90. So once it could do one of that pullback, that gives us a good entry, at least at a discount, not at the premium that it's in. And once it does that and recovers, we could then see that we buy that 138. It's important that it actually holds above that blue trend line.
Okay.
That's one thing. If you are looking at charts, just draw that trend line because it's a good indication. Because once it's breached, then it tells you a different story. But if it bounces there, then it gives us that buying opportunity. And we can see go to, it's actually past that 149.50, so it's likely to breach that level again. Head to 161, 176.15, and so onwards to about its all-time high, which is at 207.90.
Oh my goodness.
I know, right? Very juicy at this point. And remember, it's breached that resistance trend line, which means that trend is likely to become steeper. And if it breaches that resistance trend line, it becomes even steeper. So when I say steeper, it means the celerity in which it moves to the resistance level gets a bit faster.
Okay.
So
it would be better to then get in at that point.
Yes, but at what the weekly
138.
RSI says, just wait. Wait for that pullback to 138.90, and particularly to that blue trend line that I've got here, which is a key resistance trend line. I know it's a bit faint at this point.
Yeah, I can see it.
Because if it doesn't, and if it corrects, right, and it trades through that trend line, then it means don't get in as yet, because there could be further pullback to about 131.25. And if it does breach the 131.25, then there's going to be a potential capitulation to 115.10, which then means it's not the time to get into the share at all. So the key level would be, I would actually say it's between 131.25 and 138.90. Those are the levels you can get in.
125 too?
So 131.25 or 138.90. Any of those two levels. If it breaches the 131.25 mark, please don't try and
Don't take your chances.
Don't take your chances, because then that means there might be a change in sentiment for some reason, and it's likely to capitulate, and you don't want to already get an investment that's going to give you a minus.
Yeah, and I mean, yes, gold prices, platinum prices are up, but we do have those local government elections that could throw its spanner in the works as well, and the US midterms.
You know, and then next thing, you're now sitting with a share, which I would really say you should sell at that point, but it's not nice getting into an investment that gives you a minus already, you know.
Yeah.
So rather wait for that. The RSI is warning us to wait, but that we could get it at a discount, but that upside opportunity is still intact.
Okay.
For as long as JSE continues to trade above 131.25.
Okay. 131 is what to watch, right?
Yes, 131.25 and then 138.90. Those two levels give you nice buying opportunity, entry prices. And yes, you could just, every time it goes up or breaches these key resistance levels I've got, you just reload.
Okay.
So you can at least increase your returns. So how that would look is that I took it from 138.90 to 207.90, which is its all-time high, a nice 50% return. But as I said, anything below 131.90, we might see a 12% drop to 115.10. So that's why I'm like, please don't get in if that should happen.
Okay.
All right.
We can move over to your last
We can move on over to Remgro.
Yes.
All right. So Remgro also held quite firmly at 82.90, which was its all-time low, I think. Kept this really nice bull channel that eventually led to a breakout of its long-term bear trend, and again in September 2024. Can you see the rhythm
the trend
here?
there, yes.
They seem to have broken out around that
and
time.
That's also, you think about it, it's post the election, right? So we did see some improved optimism, improved sentiment when it came to
It's telling you that sentiment is improving. And again, what's quite significant and which makes Remgro even more juicier is the fact that, that upper slope. When that upper slope is breached, the trend becomes steeper.
Okay.
If it doesn't, then it just kind of oscillates within this. It will still be bullish, but it's going to track a bit slower. But if it breaches the upper slope, then the celerity of its movement increases. Now this one, looking at the RSI, actually says the minute or at the time when Remgro trades above 185, it actually gives you that buying signal, because the RSI is not overbought. It's come off its overbought territory. It's retaining its uptrend. Everything is looking quite appealing for Remgro to give us a buy signal at 185. Trend becomes steeper, RSI maintained, and we could see it go to 202.15. You know, that natural progression to those resistance levels until it gets to its all-time high at 279.25. Alternatively is that every time, as you can see, it tests that upper slope, it has a tendency to pull back.
Yes, slightly so.
Yeah, or sometimes it could go all the way down to the lower slope. Can you see?
Yes.
So if at some point it pulls back below 164, then don't get in, because it's likely to then pull back to about 138.60, which would also give us a buying opportunity cheaper. But obviously it would just mean there'll just be this oscillation between these two slopes. Ideally, I would like it to breach 185 and start picking up momentum.
Okay.
So let's wait for that. I would say do not get into Remgro if it had to trade below 138.60. Then it's not a time to be investing. Then it's now a change of sentiment.
To pull back even further.
Yeah, even further. And even get back into its bear trend. So I would just say don't risk it at 138.60. But looking at it present, if it's trading above 185 from next week, you can actually get in.
185, it's steep, but I mean, looking at that graph, it does seem like it's an upward trend.
I mean, yes, it could give you a nice 51% gain to its all-time high at 279.25. So yeah, if you go for the fractional shares, like on easy equity, that becomes a bit easier. It's not that, it does become that expensive. But it's worth the investment. Considering where they are all now moving from long-term bear trends, it's obviously showing that investor confidence is on a rise, and you want to follow that sentiment. You don't want to not do that, you know.
Yeah. Moxima, all right.
So that's the summary.
Yes.
If you want to know, these are the levels with your potential upside. I mean, Coronation could make more than that. But JSE and Remgro, that's where the upside potential is. And this is really much a medium to long-term view.
Okay, that's what I was going to ask you, because I think we just spoke about it at Coronation only.
Yeah, it's a medium to long, so you kind of put it in your portfolio, let it run, and until such time as obviously start reaching key support levels where it would be a sell, but for as long as it's not, you just stay in and reload at every resistance level breakout.
All right, let's leave it there. Thank you so much for your time and
Thank you
taking us
too.
through those counters. Lovely to have you in studio as usual.
Thank you, it's lovely to be here.
Right, that was Moxima Gama, Senior Technical Analyst at the Money Hub. And that's all for this week's episode, but stay tuned for lots more coming up right here on Business Day TV.